Welcome back. Ready for the next round of our economics MCQ challenge? In the last video, we tackled 10 questions on economics. Now it's time for the second round, another set of 10 questions to test your knowledge. Stay tuned, note your answers, and don't forget to share your score in the comments. Let's start. Question 1. As a result of rise in consumers' income, the demand curve for coarse grain, that's inferior good, will be. The options given to us are these. So we have to check whether there will be movement along the same demand curve or will there be shift. Now, always when you get these type of questions, first thing we need to pay attention to what is being asked. What is inferior good? Inferior goods are those whose demand decreases when the consumer's income rises, as people prefer to buy higher quality substitutes. Now, in this case, inferior good is coarse grain, so probably consumer can shift to better alternatives like refined grains or high quality food products. Now, what you have to notice when you have to do movement or shift, if there is a change in demand due to change in price, that means there is a movement along the curve. And if there is a change in demand due to any other factor than price, then it is shift. Now, in this case, what is causing change in demand? It's not price, it's consumers' income. So, income means we have to see whether there will be demand curve shifting to the left or the right. So, in this case, what happens if the person's income increases? It means he will reduce the consumption of this inferior good and probably will move to the better quality product. So, this will result in a leftward shift of the demand curve. It will indicate a decrease in demand at all price levels. I hope this is clear. These type of questions are very important and very easy if you get the concept right. Now let's move to the next question. Dash is the difference between the current value of security offered for loans and value of loans granted. So this is a knowledge-based question. You should know this. These are the options given to us. So what do you think is the correct answer? It should be margin requirement, isn't it? Margin requirement refers to the difference between the value of the security offered as collateral for a loan and the actual loan amount granted by the financial institutions. It's a risk management tool used by banks to ensure that they are protected from fluctuations in the value of the collateral security, what the borrower is giving them. Now, why other options are incorrect? You should also rule out that. Profit refers to earning after cost. It's not the difference between collateral value and loan amount. Then you have reserve requirement. Reserve requirement, this is the percentage of deposits that banks must keep as reserves with the central bank, CRR, SLR. This is also not related to any way collateral-based loans. And anyway, margin requirement, we know the correct answer is. So, option 4 is also ruled out. Another question. In order to encourage investment in the economy, the central bank may dash. Now let's see what are the options given to us. Now these are the options: increase in bank rate, increase cash reserve ratio, sell government securities, and reduce cash reserve ratio. Now these type of questions are also very important because they check your deeper understanding of the concepts. So when you're doing this chapter, please pay attention to how these methods of credit control are used by the government. So now, first of all, let's take one by one. Let's understand increase in bank rate. Now, what is bank rate? Bank rate means that the rate of interest which is charged by the central bank from the commercial banks. And what impact does it have? If the commercial bank is getting a costlier bank rate, it's a cost to them, then they are going to pass on increased interest rate for the consumers, isn't it? So it means it will increase, it will be leading to higher borrowing cost, which will discourage loans and investment on the part of the customers or people. So bank rate, this option doesn't seem to be correct. Let's check sell government securities because second and fourth are opposite of each other. Let's check the third option, which is government securities in open market. Now this is selling and buying. This is another open market operation. Now what happens here? Selling government securities means that government security will go to the people and money will go to the bank, isn't it? So there will be less money available, less funds available with the people for investment. So this is also contractionary policy. This will reduce the money supply and therefore discourage investment. Now we are left with increase or reducing cash reserve ratio. Now what's a cash reserve ratio? Cash reserve ratio is the percentage of bank's total deposits that must be kept as reserves with the central bank. Now what will happen? If we reduce CRR, it means that banks are required to hold less money in reserves, which would lead to increase in the amount of funds available for lending to businesses and consumers. And that also means lowering interest rates and increased investments. So the correct option is reducing cash reserve ratio. And the opposite would be increased cash reserve ratio, which would rather reduce investment and not increase investment. So I hope this is clear. Again, these type of concepts you need to understand very well. You can get a long question on this where you have to explain each of these methods in detail. So if you know this type of reasoning, this type of analysis, then you can tackle any type of MCQ, short answer or long answer. Next question is, which one of the following is the correct meaning of collateral? Okay, let's see what are the options given to us. These are the options. Now, if you look at the first option, it is the total sum of money borrowed from banks. Now, this refers to a loan amount. It's not collateral. Yes. Then second option is given as it is the amount of money deposited in the banks. Now, deposits are also not collateral. They are savings or fixed deposits or recurring deposits. You have done different types of deposits. Yes. Third option is it is an asset of the borrower used as a guarantee to a lender. This sounds correct, isn't it? Now, first of all, let's understand what is a collateral. Collateral is an asset or property that a borrower pledges to a lender as a security for a loan, isn't it? If you want to borrow money, the lender might ask you for certain security, certain collateral. So where you either give your papers of an asset you own, and that lender is going to keep as a future security. Now, if the borrower fails to repay the loan, the lender has the right to seize the collateral to recover the outstanding amount. So you might have examples like house papers, you leave stocks, shares, bonds, yes, certain type of vehicle papers with the lender. So that is called collateral. So if you look at the third option, it is an asset of the borrower used as a guarantee to a lender. Anyway, the fourth option sounds incorrect because it is the total amount of money invested in a business. Investment refers to capital, while collateral is a guarantee for loans. So the correct answer is third one. If the cost of production is less, then the supply will dash. Okay, what do you think the answer would be? Will it decrease, increase, will remain the same, or none of these? Now, these type of questions are again very important. Again, analytically, you should look at them. Now, if you know what is cost of production might include your raw material cost, lower wages, isn't it? Or if government is giving you subsidies. So all these are factors which affect your supply. So when you are looking at cost of production, if wages go down, if raw material cost goes down, then what will a supplier do? Supplier would like to sell more at the current prices, isn't it? It means firms can produce goods at a lower cost, making production more profitable. This will encourage firms to increase supply. Why? Because they can now sell at existing prices, still earning higher profits. Okay, so the correct answer is that if the cost of production is less, then the profit per unit will go up, which will induce the supplier to supply more. They would like to increase supply. Next question is, which of the following factors of production has a unique supply curve? Now, it means the options given to us are all four factors of production. Let's check. Which of the following factors of production has a unique supply curve? Now, what do you think the answer? Now, if you look at land supply is perfectly inelastic because the total amount of land is rather fixed and it cannot be increased. If you look at capital, the supply of capital depends on investment decisions and it is influenced by interest rates also. So it does not have any uniqueness to the supply. But what sounds more correct? It is labor. You must have done backward bending supply curve of labor. Yes, even the entrepreneur, you cannot say that the supply of entrepreneurship is predictable or is not predictable or is not standard, because it all depends on who has the ability to take risk, innovation, and economic conditions. But if you remember how we study labor, the supply of labor is unique because it depends on various factors: wages, skill level, population, work preference. It is typically backward bending at higher wage levels. Why? Because higher wages may reduce rather labor supply, as workers will start prioritizing free time or leisure time. So this is why, because it has a backward bending supply curve, labor has a unique supply curve. Next question is, a policy under which the government uses its expenditure and revenue to produce desirable effect and avoid undesirable effects on national income, output, and employment is called dash. Let's see what are the options given to us. The options given to us are monetary, wage, price, fiscal policy. Now, as an economist, you should know all these policies very well. Okay. Now, let's go one by one. Let's understand what is monetary policy. Now, monetary policy, if you remember correctly, it is related to the regulation of money supply and interest rates, and it is typically controlled by the central bank. Here we are talking about government. Yes. So it does not directly deal with any government spending or government revenue. If you look at wage policy, it refers to government strategies to regulate wages. It will not affect any of this. Yes, it is just directly related to wage policy. Price policy is how to control inflation, price ceiling, subsidies. But again, that is also not something, a tool for managing economic growth and employment. What does fiscal policy do? Fiscal policy involves government spending and taxation, which means your spending is expenditure and taxation means it's a revenue for the government to influence economic activity, isn't it? It is done to influence national income, output, and employment. So this becomes a correct answer. So fiscal policy is the policy which is used to stimulate or slow down the economy by adjusting government expenditures and tax policies. Okay, this question is, dash implies an introduction of private ownership in public sector enterprises. The options given to us are disinvestment, globalization, privatization, liberalization. You must have done all these terms. Yes, again, each term you need to understand well. What is disinvestment? Now, disinvestment refers to the process of the government selling or reducing its stake in public sector enterprises. It leads to increased ownership, private ownership, isn't it? So this sounds the correct answer for this. It does not necessarily mean complete privatization, but it does involve a transfer of ownership to private players to some extent. So that's disinvestment. And if we look at other options, let's rule them out also before we take the correct one. Globalization, it cannot be, because it refers to economic integration among countries, which does not anyway relate to ownership in public enterprises. Then if we look at liberalization, it refers to reducing government restrictions and controls in the economy, making it more market friendly, but it does not specifically involve ownership transfer. If you look at privatization, there can be a confusion between privatization and disinvestment, because privatization also involves transfer of ownership and control. Now, when we look at disinvestment and privatization, privatization means the complete transfer of ownership and control from public sector to private entities. Privatization is a broader concept. Disinvestment is a step leading to it. Okay, so please remember that disinvestment is a part of privatization. So disinvestment correctly refers to like partial ownership, like you start, it's a step towards introduction of private ownership in public sector enterprises. This is again a tricky question, I know, but please pay attention to these terms carefully. Now we have come to our last question. Last question is, dash payments are referred to those payments which are to be done in future. Now this is related to your money chapter. If you remember standard of deferred payments, so you should know the meaning of the term, isn't it? So let's first see what are the options given to us. These are the options: indirect payments, stable payments, derived payments, and deferred payments. So What is indirect payment? Indirect payments are payments which are made through certain intermediaries, and it's not related anyway to anything in the future, isn't it? It doesn't signify that. If you look at stable payment, it means again consistent or fixed payments over time. We are not talking anything related to future. Derived payments, we don't use this type of term in any financial context. You must have come across deferred payments. Deferred payments are those payments which are to be done in the future. So this is our correct answer. Okay. I hope this helps. This brings us to the end of this challenge. How did you do? Let me know your score in the comments. Wishing you all the best for your exam. If you missed part 1, you must check it out now. Link is shared below. And check for other related practice videos where you will find past papers as well as more MCQs.